Okay, can you hear me, guys? G'day, Lauren. Ready to rock and roll? Fantastic. All right, welcome to Trade Setup. Not too many on at the moment. I'll probably drift in slowly. Um, yep, for anyone that new that watches this later on, thanks for joining us. You can follow us at top left-hand corner at Twitter. It's what at trade_setup. Top right is Facebook, and the bottom right, subscribe to us at YouTube. Also, we have the TradingView app. So if you jump on the TradingView, you'll see a few alerts come out every now and then. Jump on the TradingView, and we've got some bits and pieces on there as well. I think if we search trade, might be trade_setup as well, capital T, capital S, and you'll find us on that. So let's get the ball rolling. Markets are strong. We're only up 10 at the moment, so yeah, not such a big deal. But I think overall, that structure. Sorry, let me just get the chart up. That's not what I wanted anyway, is it? There we go. A little bit smaller. We don't need that much info. So that structure there is pretty strong. All right, so we get actually, to me, that's, you can see, the sell-off, bought up, high, low, and bought up again. And it's just teetering on breaking through around that 28.68 mark into new all-time highs. G'day, Gino. Would not be surprised at all when we said this before. Now that the structure's changed slightly, as in it was still, we still had that contracting. Actually, we'll get that on TradingView. We still had that contractive price action. Let me just get up my pairs there. So that's probably a little bit clearer. So we had this price action. Let me just do one more thing. There we go. You should be able to see the price on the right-hand side okay now. But let me know either way. All right, so what you've got, we had that contraction. So by contraction, we mean higher lows, lower highs. The market's pressing in while it's a bit undecisive or which way it's going. But now that it's just broken up through 67.40, it's started to lift. So you've got high levels of holding in this little run up, and it's just breaking through that high around 67.40. Just taking out that high probably the last couple of days on a 2-hour chart. So let's forget about that. This session it was. I'll take that back. So it's broken up, which leads me to believe we're going to drag in some more buys. We're going to start attacking this lower high at 75 and then press towards 68.70. So I think the momentum's definitely well and truly up. We were thinking with all the headwinds, you got massive amounts of debt in the US. Everyone's just lapping up extra debt. With things like the US, I think their debt's going up. It's trying to pay off their debt. They had their numbers out. What was it? Numbers out. It's in the morning report. Can't remember what it was, but they come out just showing that their deficit is increasing, which we know and we expect, and it has got to the highest levels, which has been for a few years now. So they keep tipping along nicely, adding to debt, but it seems the market's well and truly set on making new highs. And this is what I remember the GFC, if anyone remembers back in 2007, I think it was about September, the US pushed into new all-time highs and everything was bullish. And then it just turned on a dime pretty much, got in there, finished below, and then had sold off. And then you got the GFC, which wasn't long after that. So I'm always getting nervous that something like that's we're getting a bit of a setup, a big trap, massive trap on the upside. So that's why I'm always spruiking and talking about the risks to growth, the risk to this, the risk to the downside. Doesn't mean you can't trade it on the way up. It means you have to be, don't throw all caution to the wind, load up, unless it's a quality setup. And if you happen to build quite a few positions, but they're all quality, that's great. But if you're just diving into anything left, right, and center, that's a different story. I think so. Picking your high quality, high probability setups, I think it's a good thing, and there's nothing wrong with doing that, even if the markets are, you've got reason to believe that they're going to tip over. Who knows? All you can do is follow the price action, and the price action will show you what's happening. And if it's heading higher and you happen to believe, okay, I'm not going to get in, I'm not going to load up, I'm not buying anything because it's going to roll over, you could be left holding nothing when the market rallies up. There's nothing to say it's going to turn around. This market could just keep going up. All the bears will be thinking, time and time again, they're thinking, oh, it's going to roll over, it's going to roll over. And they're always talking up, we've got too much debt, the US has got too much debt. We're dropping rates everywhere, left, right, and center in RBA, ECB, US are looking to cut rates again. That's not normally good. It is, the US has got pretty much full employment and they can't, can't really add more jobs. So where they're going to get growth from, they're still talking about, it's only really talk of trade phase one coming through that's buoying the market at the moment. That could, not saying it will, but it could fall apart. It seems to be that they've got it perfectly. They've done well. You can see that every time Trump would talk it up, it'd be a prime sort of time to buoy that market. And sooner or later, what we've done is just running out of sellers. Sellers they've either had enough or they're just getting cleaned out time and time again when this market pops and cleans them up and it pulls back maybe for a day or two, then bounces back again. But either way, I think the heat's really coming out of the sell side and they're just waiting to see what happens now. And this is what sort of concerns me. When it turns bullish, everyone turns bullish, pop into new highs, and the markets could get unloaded on. We don't know, or it could just keep going higher. So all we can do is really watching this price action here, and we know it's heading higher. We've got some positions. We're building up a couple at the moment, which I think everyone should because there's some opportunities out there. It's building up, but just be wary what's going to happen potentially if we retest these highs and we fail from this highs. If we build a lower high, that's the third time. We tested the highs just back in when it was July, broke into new all-time highs, only by a few points, but finished below them, then backed off. If we do that again and we retest it and fail again and we hold a lower high, this could go for a deeper correction through 64. That is the possibility. And then we just have to position ourselves accordingly. We have to manage our risk accordingly as we go. So that's all we're focused on at the moment. Let's just go through and look at the other markets. So you got the S&P, I think intraday it traded into new all-time highs. You can see it's the daily candle. What do we get to here? High of 3027.4. The recent was, what do we get new intraday? So but it couldn't close above there. Okay, so it didn't actually quite get there. Let me just check something else. I seem to believe, if I'm not mistaken, that we got into new highs. Let's just go here. Major markets. There you go. Major markets, S&P, 2739. I thought we did. I actually thought we just traded to new all-time highs intraday, but closed below. Am I reading that right? High 27.39, close. Oh, that's what they were talking about. So it traded through the all-time, but it couldn't. The all-time closing price, but not the all-time high. It missed the all-time high by half a point if you're lucky, and couldn't close up there. So I'd say tonight we'll probably punch through and then just be interested to see how it goes tonight. We've still got earnings in the US. It's a big week this week. I think you've got the Fed announcing potentially a rate cut, and they're expecting a 90% chance it's going to be a rate cut in the US. Then on top of that, you've got, I think ECB or BOJ, or it's the Japan Fed is looking to cut rates. Then you've got the numbers out on Friday, US payroll numbers, employment data. That could cause a problem if the jobs are less than expected. But I think at the moment, the markets are focused on earnings. They're going to get through earnings, and they've been coming out slightly better than expected. Maybe that, like we said, they might have set the bar quite low to actually beat the earnings. But either way, they are coming out better than expected. Better than expected. So there's quite a bit of pressure. It may be on the trading front quite a sort of contained week, purely because of all the data that's come out this week. But either way, they've got trade war done well. They're talking that up. That's progressing nicely. And there's no arguments. They're coming to some sort of agreement of phase one. They keep spruiking. They probably don't be surprised if we, at midnight tonight or just before the US opens, there's more talk of a trade war, of a deal getting done, just to buoy the market coming into the open in the US. and then it finishes in all-time highs. So Trump's got something to spruik when he talks about his 2020 elections. I'll push the market in the all-time highs. Look what I've done for the economy. Yet I don't think he's done too much, caused probably more issues. But that's the nature of the beast at the moment. Market's going well. Probably, like I said, probably pop into all-time highs, which will drag us up tomorrow. I'd expect it is going quite well. I think we're going to get through, like I said, get through 68, trade to new highs. Europe's probably not quite as good. Let's just take a look at that quickly. And it's not the Dow, by the way. The Dow still could be capped at this 27, just at 2705 level, 27,050. The highs are sort of up towards 27.4. But I mean, that could do that in a night, really. It could rally 400 points quite easily over a couple of sessions. I don't know if it will be coming into the numbers tonight, but that's the Dow at the moment. It's still edging high, holding higher levels. So that's looking positive. NASDAQ, same sort of scenario, just traded. I don't know if it closed and do all-time highs. May have. So that's bullish. Longer term, you still, got this big push up. We're not making significant highs, and you can see last time we sort of popped into highs. We don't, there's a deep correction. If you look here, deep correction, pop into the highs, only take them out by a few points, and we'll have a deep correction, pop into the new highs, deep correction. But the corrections are getting less and less. So it could just keep dragging into new highs, have a correction, and just keep doing this type of action over the period of 6 months to a year. You don't know. Before markets really start getting heavy. Where are we? That was the NASDAQ. We got DAX not looking so good, but I mean, that's on the rise as well. We've held higher levels off these lows, still pressing higher longer term. This move up could take us through into new all-time highs on the DAX. But again, their growth story is a little bit, they're under pressure too. They're not growing. They're cutting rates, trying to stimulate the region. Brexit is still, that's getting put on the sidelines again, which is causing issues. So Brexit is got put back. We don't know the dates just yet. I think the European Union hasn't said when they're going to, put the extension to for Brexit, and they're talking up. The UK Parliament is sort of banging on about elections, a snap election. So I think these things keeping Europe intact at the moment, keeping Europe capped a bit, because we thought Brexit was coming about, and then all of a sudden, I think it was just a bit of a ploy. It's not happening, and the market's got to reset itself. But either way, both the DAX and the FTSE reacted to trade war news. So if they come about and they do it, I mean, if they do actually do a deal, I'm not skeptical just yet, but I'm not going to hang my hat on them doing a deal for phase one. It's happened before, and then what happens, longer term. And these are the things they've said yes to before in previous discussions. They've, I think buying more from the farmers, all these bits and pieces they said yes to before. But the big issues about was it IP theft, and what they're saying is IP theft from China, from the US. They've got to sort that out. So there's these bigger issues which are still waiting in the wings, which really they're struggling to resolve. So this is, to me, seems like more fluff. But that, if they do sign off it, that's great. And then China said before, we're going to buy more US commodity soybeans and things. They don't. They pull the pin on it. So they could do the exact same thing. And then what happens? That phase one falls apart. Markets could go south because they're all just waiting on really a deal. Anytime they talk up a trade deal, bang, there's a bit of a pop in equity markets. You've got cheap debt, don't forget, which is buoying the market. But how sort of stretched can they go? And that's the biggest problem I'm finding at the moment, trying to come to terms with. But still, the market's heading higher. All you can do is buy if it's going up. So the funny thing is, we've got, I think it's a gold sector. Let's have a quick look. Gold sector's still heading higher. I think we just got in Perseus today. That's looking good. It's having a bit of a run, 82 at the moment. So that structure looks great. I mean, look at the longer term structure. Let's just go to that. That longer term looks good. I mean, it's been banging around these lows for quite a while. It's only this year it's really starting to pick up. We had the gold run when gold took off, and Perseus went with it, hit 90, then backed off, started getting supported around 65, and it's starting to lift again now. So this could be just, bouncing off the MAs. We've got a secondary leg up, And that secondary leg, if you go from just say 45 to 90, add 45 cents to that, you're looking at $1.10. This leg could extend to. I mean, it could get further than that, but either way, that's looking quite nice considering that the markets are still pressing higher. You got the overall market's pressing higher, the Dow's pressing higher, yet gold is too. As maybe they're looking at it as a safe haven, or maybe that's just a pure technical play. It's looking good. What have we got here? Let's just have a quick look at. Let's look at the sectors. Done it again, haven't I? Here we go. Oh, come on. Here we go. All right, so gold's it's up slightly for the day. The markets, they're pulling back a bit. We're up 25 on the open, and we're just falling off at the moment. Only up 7 points. It may be just that there's such a big week this week where anything can happen with regards to the ECB, with regards to the Fed Reserve, the US cutting rates, US dollars rallying, which I don't think Trump likes that so much. You prefer, rate cuts are probably. Well, it would be interesting to see actually. It's pretty much factored in a rate cut, 90% factored in. Expectations of 90% they're going to cut rates in the US. So why does it keep popping? I mean, it's still popping because it's still seen as a safe haven, and if you're not going to get yield in the euro and the pound, then you go into buy the US dollar across the board. And as the euro and the pound sell off, and other currencies, say the Aussie's selling off, the euro and the pound were heading high on the back of Brexit. Now they've turned around and been heading south lately, the last couple of sessions. So that's putting pressure, obviously, on the euro. It's putting pressure on the crosses and putting pressure on the upside for the US dollar. So even though they're cutting rates, they're potentially looking at cutting rates. It doesn't necessarily mean the US dollar has to go down. It might have that reaction down, flush out a few longs, and then turn around and head back up again because it's seen as, they're going for yield. Now, if the ECB cut rates as well, that might bring in, and they've got more problems in the US, for example, more pressure on their currency, more pressure on the upside on the US dollar, even if the US do cut rates, because they're potentially not looking at cutting it after this yet, because the jobs are still full unemployment, still growing, all these sorts of things. Until the numbers start going south in the US, I think that sort of theme of US dollar buying will continue. But we'll see. Any questions there, guys? Who's trading currencies at the moment? We've got anyone having a look at those? On the SPY, I haven't seen. We used to touch on this. That's not what it was. Here we go. I mean, this SPY is kind of difficult to trade. I mean, you got this action every time it's sort of headed south, bang up, but it's sort of get capped, and then a lot of the action's happening after hours. I'm finding. So if you're trading the SPY, you can get chopped around during the day, and it takes a good leg up overnight. We did have this. That was in the afternoon, but that, if you look back here, this was from the open, was it? No, that was at night too. Am I right? 4th, 5th, yep. That was in the US session. So you get these sort of good, strong legs up after hours when, I'm not going to trade after hours. One, I'm not up at that time. And two, it's kind of a liquid. So these things your spreads are wider. If you're trading futures, they can get a bit wider, thin markets, and the same on the CFDs. Spreads are widened slightly and they can move a lot faster. So if it's against you, really chip you around. But all I'm saying really is you can see on the SPY action, a lot of this is getting lifted at night. So they're chopping around during the day and then lift at night, chop around during the day, lift at night. We're getting a bit of a sell-off now, but we could just be simply retesting the breakout of around that 67.28 and just trying to find more liquidity to start building a new move up. And I would expect us sooner or later to hit 67.60 and take out, or at least test those highs. If we go back, I'm just going to have to drop it to a different chart. What do I want? This one here. Should be a half an hour chart. All right, so you can see it's the highs from way back in September. No, yes, September, 20th of September. So before we had that big sell-off, and we bounced all the way back up again. So yeah, this market's quite strong. I mean, it'll be interesting to see what kind of reaction. I do expect, at least if the market's going to be negative, I expect a wash at that level. If it resets here, and a lot of the time the market can sort of pop up to those highs, not quite get there, reset, and then just slam straight through it and continue on its way up. And that would probably match up with a move up to the ASX to the all-time highs. And you look at the stochastics here, we've had this sort of overbought scenario come down to oversold. So the pressure's well and truly on. And we're really just trying to find some liquidity, it looks like, for a bounce, for a bit of a bounce. Whether or not that plays out, where we sort of bounce into the close here, or we start chopping around here and sort of settle slightly higher to the close and then reset during European, and US pops up and we go up with US again, and that's when we trade up to 67.60 through the evening again, and then we open up again tomorrow on the ASX, and then it sort of gaps up and drifts lower. So it's kind of hard trading at the moment, but sorry, just seeing some emails pop up. So any questions there, guys? I haven't done much trading. I did do a trade on the SPY, if I can find that, just to quickly show you, recently, which I think went all right. I just can't remember what date it was. I can go through that quickly. So, but put up any trades if there's anything you want to look at. Otherwise, we haven't got a big group in today. It might be a short but sweet session. SPY. That was the last one here. That can't be right. Oh no. So there was a trade here. So this is what we discussed a few times. This was the action that I was looking at on the 30-minute chart, and we found support. We had previous support of the days. I don't know if it was the same day. It was, but this is a 30-minute chart. So that was support towards the end of the session. It's drifted down, found that support, and we're looking for just that bounce off support. You can see momentum starting to rise. Momentum was down, but it was starting to lift all session. So the reason behind a buying of this, in this scenario, was that. Yep. So that's the open. Reason why I was buying in this scenario, because you know that anyone's being short intraday might just want to close out. So you do get a bit of a pop into the close as they close out shorts. As the market sort of reset, either way, if they're hedging using the futures, the market's drifting lower, they're shorting in with the futures as they're buying into the underlying bag of stocks. But either way, they're probably going to, generally you get that sort of bounce up into the close. So that's what I was looking for off the setup. And of course, we've got the setup. You retest again. So press down, held first time, but you got lower highs coming in. So you got this contraction lower still, but this liquidity around let's say around 65 even was holding. And as we hold it a second time, we started holding a higher low here. Yeah, I knew exactly where the risk is. Risk just below, expansion up, expect it as soon as we started popping up, all this contraction lower, we're going to start to, the idea is you're going to start to put pressure on the lower highs. So anyone that's been selling, especially late into that session, later here after midday or after 1 o'clock, they started piling in. So you got initial shorts from here, maybe shorts from here, and again, starting to pile in, putting pressure on, but the pressure will be initially on these first, all these, the later traders, the later shorts. So by the time they've got more confirmation, the price is heading down again, started to stall, see through, pumped up, stalled sideways, consolidated, started to head south again. They've jumped in, but this here, this move up was just engineered to just put the squeeze back on and start to lift price. So that went okay. It was only about 7 points, I think. There was another one, I think a bit later. I've just got to find the dates. No, I'm sure that wasn't the latest one. I did have a trade the other day, which really went nowhere. Oh, here we go. So that's the 30-minute chart. I think it was a short. I think it was a short off here. Actually, it didn't go too bad. I think it was a short after this level, just off the lower highs. You got this press up. Market's pushed up, pulled back, pressed up through the high, and then started to fail again. And then you've got lower highs starting to come into play. So you expect really attack on the previous high or low, which is around here, if you can see that. and then just to squeeze out a few of these longs that built up. It did play out, but then it started holding that higher low, and we got stopped out here. Eventually stopped out only for a few points. I think I was a bit late to the trend, but this might have been the day when I did have a short, lost a few points, and then made it back, only basically netting about 2 points for the session. So I think it just shows too that the market, the market US could have been down the night before and it was still buoyant. The market was still sort of turning, having a bit of a pullback, flushing a few people out and then turning. So don't be surprised if we do on the SPY, we start to flush out. We're just flushing out a few of these longs on that rally, flush them out, hold a higher level and start to bounce again into the close. And then it'll be interesting to see what happens overnight. If this US can kick on tonight, then that could be what we're going to see, a lift in that 67.60. And then again, we could open up on the SPY. If we just go back to the half an hour charts. So you can see that even though, we've got one big green candle there, but that's a gap up, sell off, gap up, went sideways, gap up, sell off. So it's kind of hard unless you're anticipating the longer term direction, it's kind of hard to, buy in the open and see your position go against. It might have worked the first sort of session, but it just makes going a bit tougher. So that's why I think it's important to get to your prime setups and then just jumping into prime setups and making sure you know exactly where your risk is. And I like the ones at the moment that have had this is another one we're looking at, ABP. Let's go over that. Let's go to the daily charts. This press up, it's had a good move up, and we've had probably the last few months a good contraction off the highs around 440, and we've got lower highs, and we're starting to get some buys stepping up. So of this leg up, it's just starting to contract that leg, just starting to clean out a few of these late buys that have pressed it up. Initially from 360 to 435, they're getting squeezed out, and we're starting to show signs of lifting again. And you can see the volume starting to pick up here on the base. Bit of volume coming through, as sellers started piling in, but then it's getting soaked up. And then we're looking for this 390 to hold. So I consider this a prime sort of action, prime price action, because you're looking for this longer term continuation. Lift up, contraction, lift up, contraction. Whether we do something like this, we pop up, build a major lower high at say 420, 430. Either way, it means that we can get 10, 15, 20 cents on side before we find out, we're wrong. We're going to go for that deeper correction as the longer term trend plays out, or we just blast up through 440 and get ahead of ourselves, which would be great because then it means it's going quite well. So that's it. That's ABP. I think that's a good little price section. Like I said, Perseus it's kicking on now. We're at 82.5. That to me is the same sort of thing. That weekly trend is a cracker, and you can see that the volume started to come through as it lifted, and then we've got this pullback. Volume was holding, and then this is what you want to look for when you're getting volume still soaking it up, and we're getting these rejection. Good. I know for the technical traders, wicks when you open, push down and close back around where you open it is a sure sign, especially when you've got the weekly chart that's looking so strong, and we're rejecting the daily MAs as well. You're just basically looking, sorry, this is the weekly. You're looking for an opportunity to get into something that's just holding a higher low. So when the weekly looks so good, for me, I'm expecting it to tack $1 at least, but this could be the start of a new trend. I'll just drill that down. I want to focus in on that leg and why I think it's quite handy. Let's just draw that up. So anything you want to look at, guys, and then we'll get into it. Otherwise, what I want, screenshot, boom, boom, here we go. So the key point is that you've got sort of draw that a bit thinner. I don't want something so big. You've got a resistance zone around that 65. You can see, this is where I'm not sure if that. Let me just check something first. It may not have been the level. Oh, look, it wasn't a key level back then. It's just heading south, but it's just a level that the market's been trading at. So what you've got, the price is headed south. We found some buying all right, at the zone, it was say around just, was it 20 cents? 20 cents started to lift, traded back up and flushed out 1, 2, 3 times. We flushed out that 65 zone. But you can see here, and that's just what I said about the wicks, but in reverse. Buyers pressing it up through, reacting lower and closing below. You don't really want to see it close below a level because that's a sign that the level is potentially holding and we could fall apart. Did it again, you know, did that green candle, pressed up, went through, finished at the level. Next day, went south, finished below. And then we had a bit of a pullback here. So for a third time, you actually got a lower high coming to play. That's what led to that sell-off and that lower high just in here. So this, if you can see, is a lower high compared to previous. And that's kind of your head and shoulders, I guess, if I can draw that. If I can try to draw that. You know, head here and probably shoulder there. You got your head and shoulders pattern, which is going to, anyone that's seen that starting to form is going to get a bit excited and potentially, or if you're long, you don't really want to see that start to form when you got that shoulder on the right-hand side of the head, I guess. But that's a lower high coming to play, which then you've got that inside lower high, which really sent price back down. But what we've got is buyers starting to step in earlier again. So this is where we started to launch, and we retested 65 before we failed. Come back down and retesting that, but it's a higher level compared to 20. Say it's a 10 cents higher. And then you got the market lifting. About here, you got the same sort of price action we saw. 1, 2, 3. Before we had a sell-off. But the problem is for the, I guess for the bears, buyers were stepping in higher. Okay, again, so we got that press low. So this 3 pattern led to a decent correction. Again, we've got it here on a smaller scale, and that's a key lower high. If you're just putting, you know, resistance across the highs there, but it's getting soaked up. So each time it comes back, it's getting soaked up. So that's a good sign that longer term, we found some sort of base, you know, say at 20, 30, up to 40 cents. We're finding buyers that are happy over the longer term are happy to buy it there and go, okay, that's it. That's a line in the sand. We're going to lift it from there. Could be value, whatever reason they're willing to jump in. But it's this leg up that's probably the most important. It traded straight through with conviction, straight through the previous, you know, 50 cents. It took out 50, but that initially took it out there anyway. Took out 50 and took out 70 cents, the previous highs from this sort of head and shoulders or your minor head and shoulders pattern. So it's good conviction, and the way it's pressed up and the way it's come back down, there's no real distribution up here. So it's a good sign when you see this kind of thing, when it keeps touching up into a level. If I can draw that properly, you know, we get this sort of move back down, then you're pressing up, and then you're failing again maybe, and you're pressing up for a third time. When you keep getting up to a pattern, that to me is distribution. But when you pop up and straight back down again, and then you start to get something, you know, pattern like that on the downside, that's accumulation. So if you, that's probably not the best pattern to draw, but this sort of bigger scale, this is a bit different to these minor pullbacks and retesting minor pullbacks. If you can see what I'm talking about, I'll just draw that in a different color. Just talking about this sort of move. So you got good leg up, minor pullback, started chopping around here. That to me is more distribution. And then distribution probably leads you to believe that we're going to get lower prices and then have to see what happens from there. But when you get these sorts of spikes higher, especially, you know, just powering through previous highs and then a pullback, I'm expecting it to bounce off the MA. So I want to see action. It's going to lead me to believe that it's going to retest the MAs and buyers are going to step in and they're going to start stepping in at higher levels. So for me, this action here is more accustomed to a move higher, or it's what you technically find when markets are starting a trend or potentially starting a trend. So if this can lift up through 90, then you've got, obviously you've got your higher low that's confirmed. It's only, I would say that's nearly confirmed by the time you hit 86, 87 or so. That's just about confirmed as a higher low, which would lead you to believe that that's going to be one leg up, pullback, secondary leg up somewhere $1.10 or even higher, because there's no real, if you go back to that weekly, there's no many levels. This level's probably been taken out to high of say 90.5. What did we get to this run? 89.5. So that's been tested. We failed. So if we get through there, there's nothing really up until about $2. So just be wary of Perseus, especially if gold keeps going, if there starts being that fear driving gold prices higher. I don't know what's going to happen just yet, but it seems to be that there's a lot of gold stocks that are in a prime position. And if gold looks like it's heading higher too, which I think it is, to me it is anyway, that's why you're getting this bit of a run up in your gold stocks. just because your shares are not playing ball and they're heading higher, it could all match up to that washout we said before. The ASX and the Dow or the S&P blast off into new all-time highs. It's going to drag in the bulls. Anyone that's sort of biased one way on the indexes and go, we'll get into all-time highs. Okay, the party's on again, and you can see comments everywhere, especially if you're on Twitter. We're heading to here. We're heading to here. And you go, okay, they're raging bulls. If you're a raging bull, you're going to buy in that sort of scenario, and that could be the perfect trap. So if we see gold starting to move up and gold stocks starting to get buoyed because they've had a good pullback, gold has held the 1500 level, give or take, on the futures, and then it's starting to lift now. That could be, it all sort of lines up to a good rally in gold, and then you get these gold stocks start to lift. So there's all these scenarios. If the market rolls over, we could be getting a lift in gold stocks again. So it could be the play looking forward. We're just trying to analyze. Of course, you're going to set up all these things that if they all start to fall into line, then yeah, it's worth the risk. It's worth the play. And I think this at the moment is starting to look quite good. Well, it is looking quite good. I just want to see if it has a pullback here, holds another high low, or we may go through, touch 90, pull back, retest 80, that breakout, and then go again. We don't know what's going to happen just yet, but either way, I think that structure is looking really nice to me. Let's take a quick look at gold. I'll show you what I've had my eye on. What am I doing? I'll go to gold futures here. Probably doesn't matter, does it really? So this is only an hourly chart, but just take a step back, start off on the daily and work our way down. To me, that's bullish. We've spoken about this for quite a while. We're looking for a buy here. It's probably, maybe it was too early. Maybe it's going to lift now, or maybe we just fail here, and then you have to basically readjust your resistance as prices head south. But at the moment, that's all we've got to go by. You've got one pullback, rallied up, hit 1540, deeper correction, flushing out a few longs, and that's perfect scenario to flush out a few of these longs that have been chopping around in here. The bulls are out. This pullback, they're jumping in, looking at it, saying, okay, 15's hold, look at that, it's starting to lift. We're going again. We're going to 2,000, 3,000, whatever they think. And then you get that secondary phase. So that's really, especially if it starts to lift here, you know that there's probably a fair few stops starting to load up below from longs, and that's a perfect scenario to wash them out and then start to hold again. So as we start to hold this higher level, which I think is just confirmed now, if that's the case, once we drop down a few time frames, we'll start to see what's happening. And the way I don't know if anyone noticed the way it spiked up on Friday night and back down again, obviously back down once Trump was talking up trade deal. But again, he's got to come out. They've got to come out and do something. They've got to sign. They can't just say, he can't just talk it up. We're going to sign it in a month or so. We're expecting to sign this. We're expecting this. We're expecting that. Sooner or later, the market's going to go, well, hurry up and do it, because we're getting bored. Or the market's just going to keep grinding higher. And we saw this run up earlier too. Don't forget, the gold started running before, as the market was running hot. So once we got this big run up in gold, I think it probably went hand in hand with a bit of a pullback on the market. Let me just check what date was that when it started running up. It was in May. What was that? That's October. Is that the initial one? Yeah, so gold started running up basically before the ASX tipped over from those highs. So it was already on its path higher. If you can see, we pressed up, and if the longer term it was starting to chop around here, 1375 was always going to be some sort of liquidity zone. You can see touched up here again back in April 18, backed off, touched up again at the start of the year, February, backed off, perfect scenario, and then launched through it. Once we started, equities were actually still going high at this stage when gold started taking off. So I don't know exactly when it tipped over. It was July, on the daily, July, end of July, wasn't it? Let me just get that back up. So end of July was about here. So gold had already consolidated. So that was a bit of a heads up that gold's consolidating that breakout and looking to go again. And that was about the time when equities just tipped over. So equities could keep going high. This could start getting a bit of a run on. And then, Bob's your uncle. if we get a couple of good shares. We've got Perseus, got a couple of others I'm just going to look at, see what sort of plays out there. Maybe we can get a couple on and see if this league can continue. If that's the case, we've got quite a good, we've got all the technical indicators, that flush, secondary move down. So you've got 1, 2 moves down, consolidating a higher level, again at around 1470, 1480, consolidate after the flush. And after this flush low, we're just consolidating here and starting to break up again. Now, if this is the right sort of resistance zone, yeah, we should at least get up to 65, even potentially if we got a big leg up. If this is enough of a pullback to flush out, consolidate around those highs, we can start to lift again. It could easily take us, I just hazard a guess, 73 up to, so what's that, $80? So if you add 80 to here, what's that, 1540, is that right? 14. That's not right. What am I talking about? 12. Oh, so it's a lot more than that. A couple of $100 either way, which could take us up to, 17, 1800. So it's not off the cards with gold. And I like this sort of structure. If we go down to, just go down to a 4 hourly, the 4 hourly is looking good. You can see that little pop up here, the rejection. It's starting to hold again at around 1504. So it's getting that retest, looking like it's holding. If we drop it down to an hourly, I mean, this structure could easily pop back up, push through the highs. I don't like the sudden rejection, but we might find that it has to consolidate a bit around these levels before it goes, or it could even just wash out a few of these, trade through 03, wash it out and then start to pop. We'll see how we go. But either way, I think gold could be a good little area to focus on going forward. All right. Bit of a rant there. All right, let's have a look at these shares. RHP. That's got, we'll just go to the weekly first. The weekly is actually looking kind of good. It may take some time to kick off. Whoops. But if we go to the weekly, and there is quite a few stocks that are looking good on the weekly, just struggling on the daily. They keep getting sort of that oversold territory. So, yeah, oversold. So at the moment, we've got a clear level through just above 310, 305 to 310. You've got price holding higher levels. You can see that. This kind of formation, up, sort of chopping around here, generally leads to another leg up. And if you take it from, just say that's your low, say $1 up to $3, $2, add that to, it's taking us to around 4. Potentially on another leg up could take us to 4. So that's that about 30% gain. Potentially that could be on the cards at RHP according to the weekly. I like how we're getting this pressure on selling. So this kind of thing is selling pressure. Okay, from overbought heading towards oversold, but you can see the price is actually at the same time holding higher levels. You can see as we get that selling pressure coming in. So that's a good sign that if you're holding higher levels, selling pressure coming in, buyers are stepping up. They're not just soaking it up, but they're stepping up to soak it up. That makes sense. They're stepping up in levels. Okay, they want in case this thing takes off. So weekly, that doesn't look too bad. It's got to get through, I would expect, 1, 2, 3. It could easily, there's nothing to say these patterns don't fail and it just bangs straight back down to 2. Nothing to say that can't happen. But the weekly suggests it could be, you're starting to ramp up. Look at this, if you can see that. Well, we'll just see that. We'll probably look on this chart. That candle there, couple of, quite a bit of volume come in and it soaked it up after a green candle, and then you got that expansion a couple of days later. So on the daily's a bit more messy, if you ask me. Now, we'll do, mate. It's just having problems with 3 at the moment. So that's why you got, rejection here. That finished above, failed straight away. And, it was quite a severe failure over a couple of days from 3 down to about, where they get to 230 or so, 240. Did pop up, failed again, back down to around that 240 zone. This is what you want to see is more of a controlled move, not spike higher, spike lower, spike higher, spike lower. You don't want to see that. That's just too choppy, and I'd rather stay aside. I want to be in when the sellers start to give up, and you get that with that sort of controlled price action, and then buyers are watching, and then they start to chase it. I want to be in before they start to chase it. And then you get that expansion higher when sellers know it's going higher, buyers are watching it going, okay, I want to be part of this as well. But at the moment, it's quite clear that it's having problems with the $3 level. Even today, it's gapped up, traded through, got to 304, and it's starting to fail. So we're down on the day at the moment. So what you don't really want to see is that liquidity come in here, start to sell it down. We could easily just go straight down to 270 and hold again. But if we start testing through sort of 260, these previous lows, then we could have a bit of a problem. And we may be looking down to 210 again. But if we can get, let me just take a snapshot of the daily. If we can get this type of price action where it holds, we've expanded back up, we've come back up on about here. I'm looking at, and we start chopping around here, when we've suddenly gone pop up to 3 again, if we come back down and we start to hold at higher levels, I'd be inclined to take an inside level. Because I think the more it holds higher levels, the more likely it's going to bust through 3. But I don't really want to buy it on a break of 3 because I think at the moment the risk is too much for me. It's probably 10, 15% risk. Does that make sense? So you don't really want to buy it on a break there and have your risk at the moment, it's down around 250. I would rather see pull back, hold a higher level, and buy the inside break. If it buys the inside break and it stalls again and comes back down, you may not be under that much pressure because it can continue to hold another higher level, and do this type of thing. But eventually, sooner or later, I think there's going to be quite a clear resistance zone. If it breaks through it significantly, that's going to drag in buys, and any shorts, stop them out, clear it out, and then get a bit of a run on. So that's the theory on that one. OCC, I've been watching that one, Vin. That is finally starting to look good. I never quite like reading about it, but it's doing some volume, isn't it? But overall, I don't remember what happened here. I think there was some really good news, spiked it up, and it spent some time just flushing out those traders. But that's probably only about a 50% retracement, isn't it? So 10 up to about 80, 40, sitting around 40. So that was a 50% fib. If you follow fibs, I don't necessarily, but that's probably smack around that 50% fib. This pullback consolidates that level, and we're starting to lift now. So, if you're just purely looking at that weekly, technically you got the run up of 4.70 cents. Take that from around 40. That should potentially take us to $1.10 or so, which is through these all-time highs. So you might, obviously you got the key level at 80, there about this level to contend with, and then again up towards $1. So that suggests a 70-cent rally, give or take, from here, suggests a move to $1, expansion of the, equal and opposite to the original leg up. If that's the case, we could get that move up there. Obviously, if you get long somewhere here, if you're long now, you're just following up these higher lows and just see if you can get at least 80 cents up towards 80, even 70, because that was a spike. This one was more of a considered level, around 70. But either way, if you're long, it's looking good. Bit of volumes come in. Session here, bit of volume, bit more extra volume on the 22nd, then again 25th Friday, and then again today, a bit more volumes come in. So I think it actually doesn't look too bad at all. I think for me, getting in now, I'm a bit risk adverse. I think your stop would have to be just below 50, and it's probably not in a clear level. But either way, that's looking good. I'm not sure if I've got that in my super or not. I know I've traded OCC. I just can't remember what I've done with it. I don't think I'm in it actually. NEA. That's picked up as well. That has to hold for me. Has to hold around here, 275. Nothing to say that this can't be a lower high and press down. All right. So that's what I'm viewing with near map. We've got no confirmation. The daily's heading south and the weekly is both heading south. And the weekly, the move up, so probably that's your anchor there. There's no real anchor. So we're flushed out. So we've got, this kind of action pull back. Inside level would have been beautiful here. Traded up pretty much, apart from these little minor levels, it traded up through that high, and that was your anchor at this leg up, probably from key support still way down at $1.40. So we can, if this is your leg up, if you're seeing this as a leg up, this contraction, it's just over 50% retracement, probably about 60% retracement of this leg up. So there's nothing to say we can't hold here. But I think at the moment we've got good expansion. That candle a week ago or so, this candle here is nice to see. So what's that's doing? You got all these bulls. It's got sort of this really narrow ranges, all narrow ranges basically in here, and then bang, big expansion candle on the upside with some good volume as well, which was about here, I think. Some good volume to accompany that expansion. So to me, a good sign. Still early stages, because this could, at the moment, we haven't really held a high low or lower high. This has been that one leg down in the contraction. Could be secondary, could go lower. Okay, so that could be the play. Not saying it is, but that could be what's going to play out. So I want to see. So that's why dropping down to your daily. Let's go here. Let's just drill down a bit more. Basically, if it can hold here and breaks up through 3, then I reckon you've got to trade on, because then you've got your high low come into play. Good sign of strength with this move up. A couple of good solid days, stalled at around 3, selling's coming back in at 3. So who's to say that the selling's finished just yet? They might be happy to take it right through $2.40. But if you get some equal and opposite buyers starting to step in at a higher level, say 270, somewhere around 270, right where it is now, I don't really want to see it test 240 again, because I think they could go into sort of that sideways, longer term sideways action. But if it can hold here, then the trade would be premised on the weeklies. We're not going to get this move down, and the weekly's going for a secondary leg up. So 1, 2, and somewhere, you're entering in here off the daily chart. So it's premised that weekly is going to hold, and you're going to get secondary leg up. We don't know where that's going to. Then on the weekly, if that's your move down, we've got that high low on the weekly. That's a good solid sign. Starting to lift, pull back, holds and lifts again. So it could be good. Keep an eye on that one too. What's next? Nan. Nan, we're struggling at 7. So for me, when you get this type of action, if it was a strong market, you've got to keep questioning yourself. Market's heading up, no doubt about that. Weekly's up, but why? And if you're just going off the weekly, so the weekly isn't confirmed anything just yet. So the weekly could easily, we've got failure, and this is if the first heads up what's going on. We've got failure here, even a washout, and you don't want to see on a weekly. You want to see press up, finish above, close that week above that level. Good sign of strength. Sign that we're going to press higher the following week. Instead, we finish below. Next week's been uncertain. We got a red week, red candle. So your key levels really are 6 and just above 7. The anchor to that leg up on the weekly is way down at 475. So if this consolidates up here on the weekly, it's a good sign of strength. But at the moment, what it could be doing, when you don't get through the high, you fail at a high, you're going to retest the previous high low. As simple as that. So if this market starts to head south and your idea is that it's going to press down to 6 again, we're just going to sit and watch it. But if we start, so that's the move up, that's that move up there, and we do this kind of thing. Say we're about here, just do a different color. We start to do this kind of thing and just grind lower, that's a good sign. And then I'd be looking, for some sort of move, some sort of entry. Once you got this grind, rather than expand it higher, push down, expand it back up, failed at just above 7. And if we can start to get a grindy kind of action, like choppy, but it's holding above 6 of this kind of price action in yellow, then yeah, I'll be looking for an entry, because it's holding above a level at 6, a key level. The anchor's way down here on the weekly. So we could get this move down and consolidate at a lower level around 550. You don't know, and that would sort of go more into that longer term weekly trend. But if we consolidate around here and hold, yeah, then great. So I think either way, once you start rejecting on a weekly basis, then you're going to be going down to your daily going, I want more time. I want it to prove itself. I wouldn't really, well, look, I guess you can buy it on a break of that high there at 725 with your stop at 650. Because percentage terms, it's not a massive risk. And if it does get through there, it could just mean that, okay, it's going to kick on. But that doesn't lead me to believe that it's going to get too far if it does extend through, because that's starting to go near vertical then. right? So I'd rather see some time. I'd rather see this action put in, chopping around, holding above 6, above 6 here, consolidating those highs. And what that consolidation is going to do is bring in some more buyers that are willing to, because it's easy to define your risk once you get that kind of price action. It's narrow risk. Even if you don't think it's getting too far, you can easily get 2 or 3 to 1 on what risk you outlay into that stock. So now NPL. Yeah, we got on the weekly. We could have, it's expanded higher, pull back, tried to go again. We've got this green candle failing, so it's going to have a deeper correction. So if we're just looking, the mere fact that it tried to go again, it couldn't, it's going to have to flush out. It's going to have to put someone on the sideline. So on the weekly chart, it looks like if it's just done that with this move down to 320, then great. Then basically I'll be looking for signs that a higher low is going to hold. And don't have to be on the weekly. Wait for your high low on the weekly because it's in a prime zone. And let's just draw that. Don't forget, if the market's, the higher it is, the deeper the correction I'm generally looking for, or the more action that I'm looking for to consolidate that level. So basically, this is all part of one leg up. It's come back, retested, couldn't get through, had a deeper correction. So if that's your deeper correction, you've got one leg, 2 legs down, you generally would think that people would be moving their stop up. They move their stop up, we get up to say 370, they're moving their stop to 330, they've just been cleaned up. So is that enough to put enough people on the sidelines? And we're around that 330 mark, which is highs, highs, highs. We're just sort of retesting that from the top side. Whether we're going to pull back, hold that, hold a high level and go again. And that's on your weekly, that would be a good entry. And that would mean, to me, a move through 370, back up through 370. But you can refine that. If that's what you expect on the weekly, you can easily refine that entry on your daily. If I can get my daily up. You might have, no, that's not what I want. Forget about that. I want this back up again. So on the weekly, this is all part of your weekly move. And we're looking for this kind of thing on the weekly. But if you can refine that on the daily, we might get, just looking at this leg here, we've got a leg up, we might get the same sort of thing. And then you can get a better level, better risk management. You get off your daily high low, which is all part of that one move up on your weekly. When if that plays out, great. And if we get this sort of secondary level leg down on your daily, then great. That's just adding to this overall secondary, just making sense. So it's just a repetitive pattern on your daily of what you just saw on your weekly. And it just means that you can refine rather than wait for a breakout up at, say 350, I think it is. You can get an earlier entry and refine it. So all you're doing is, because this kind of setup is high probability that it's going to move up. So if you're trading off that setup on your daily with regards to your weekly price action, or doing, starting to rally, then you're just refining it. You're taking less risk. So you're just managing your risk a lot better. And you're taking that sort of that inside trade when it fails off a higher low, or it fails to go further lower, and you get your higher low playing out. So those sorts of things it's good, and it's a great way to really manage your risk. Last one we get into is CAT. I was just looking at this today, actually, Lauren, to see what was going on. I've had it on a list to watch for quite a while. Just going to the weekly, I'm not a big fan just at the moment because we started getting failure just through these highs. Back in May, we pressed up, failed, and I'm guessing if you drew, we drew it up. I just want to see where it roughly failed. No, well, no. The first week here, it sort of washed out the highs and failed below. And I think this week here, I don't like the fact that it did this one big reversal. So off the highs in this week, pushed up, opened up, flushed them out, and come all the way back down again. And second week did the same sort of thing, finished up this day positive, next day opened up higher, straight back down again. So I think there's some selling out there, obviously starting to come in. Well, coming in, whether they bought it in here or whether they're trying to minimize some losses, who knows? The good thing is it's held this higher low here, and there's potential that it's holding a higher low here. So I wouldn't say this is a weekly trade for me. I don't like the weekly action too much because what I'd be looking for on the weekly is more, leg up, pull back, leg up. You got to take into account those sort of failures that could easily lead to, your sort of head and shoulders. You got lower high coming to play on the right shoulder, sells down, goes through $1, comes back down to test 60 cents. So that's what potentially the premise would be. Even if it doesn't get anywhere near 60 and it comes and retests $1, you're going to get a better entry, 40 or 50 cent better entry. If you're just buying on this pop here, say it gets through this green candle, or it was $1.40, just pops for $1.40. And then again, we've got this kind of action on the weekly, and we're about here. We might get, we'd say we have this minor pullback. I don't know if you can see what I'm talking about, but you get this sort of move up, doesn't get up to the high, and then failing from there. It could just flush in a few with a breakthrough at $1.40. It'll be clearer on the daily what I'm talking about. You can just see these two candles here, latest two candles. Pops for $1.40, drags a few buyers in, and then turns around and squeezes them out. So that could be the play from the weekly and then head south. For me, on the daily, if we're just checking what's happening on the daily, it could be that it could be setting up, and you're looking purely at this setup through here. Yeah, look, on the daily basis, if it comes through buying on the entry through $1.40, you're going to have to put your stop around 125. But you know that potentially this is the leg down, it's this failing, but it's just the weekly that leaves me with some doubt. And if you start to get, at $1.40, it hasn't really got through $1.40 and it's getting to overbought, I'd step aside, I'd just leave it, because I think the weekly price action is a little bit too weak for me. And we could just do this sort of pop up, go to $1.45 and then completely fail, back down to $1 because of what the weekly's showing, right? And essentially these two candles. So that's why I haven't really worried about CAT for a while now, sort of keeping that on the sidelines. So, all right, that's about it, guys. I think any questions just on what we've gone over? If there is, and I haven't covered something, just send me an email, support@tradesetup.com.au, and we'll go through from there. But otherwise, we'll call it a day there. Look at 85. God, I don't think we're going to have to take some profit on this. In and out, take a partial on Perseus in the one session. I don't know where we're at the moment. Just going to see 81, 85, is it? So it's rallied nearly 5% from the entry. So we'll keep an eye on this one. If this blasts through 90 today, I'm happy just to take some off. But either way, if it gets through 90 and finishes above 90, that'd be a cracker. I think maybe it's worth just holding on. Don't take a partial just yet. See what happens to gold. I think it's looking good either way. All right, guys, we'll call it a day there. Any questions? Like I said, send us an email. Have a great day, and we'll see if we can get in. See if we can get in on some of the mornings. Anything big happens, overnight in the US, I might jump on and be on it around just before 10 o'clock. But we'll see how it plays out the next couple of sessions. Remember, it's going to be a big week, so don't get too excited. All right, guys, enjoy. I'll speak to you again soon. Bye.